Yo, what's up? My name is Connor with Sensible, and today I'm going to teach you how to get the most out of your tax return using the American Opportunity Credit. First, I'm going to teach you exactly what that is, whether you are or whether you're not eligible for it. I'm going to teach you exactly how to do it. I'm going to walk you through it. And then, if you stick through to the end of the video, I've got a special bonus offer that can get you even more money that you're not going to want to miss. I haven't ran into many others that use this method that I'm going to show you today, so it's kind of slept on, kind of underground, and it might sound too good to be true, but I'm going to show you the tax code to prove it. So right here it says, any amount received as a qualified scholarship by an individual is excluded from gross income if the individual is a candidate for a degree at a qualified educational organization, which normally blah, 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 pretty much going to college. A qualified scholarship does not include amounts used for incidental expenses such as room and board, travel, research, clerical help, equipment, and other expenses that are not required for either enrollment or attendance, or in a course of instruction at an educational organization. Then the second part kind of links to that too. It says gross income does not include any amount received as qualified scholarship by an individual who is a candidate for a degree in an educational organization described in section blah, blah, blah. Generally, any amount of scholarship or fellowship grant that is not excludable under section 117 is includable in the gross income of the recipient for the taxable year in which the amount is received. So that section right there is what we're going to be using to make you thousands of dollars. In summary, it's saying you can include your scholarships, grants, things like that in your gross income, and that's exactly how we're going to get you the most out of your American Opportunity Credit. The American Opportunity Credit is dollar for dollar for the first $2,000, and then for your next $2,000 is 25%. So you get a total credit of $2,500, and that's for your qualified expenses. And we'll get into what that means a little bit later. There are a few conditions which you must meet to make sure that you're eligible for this credit. First, you must have a modified adjusted gross income, or MAGI, of $80,000 or less. And if you make more than that, the credit does phase out by 10% per $1,000 up to $90,000. Second, you must be an undergraduate student enrolled at least half-time for one semester out of the year and pursuing a degree. And third, you must have no felony convictions for possession or distribution of a controlled substance. So what that means for you is if you had a crazy new year.
What is this?
I have no clue. Oh my God.
You might have copped a felony drug charge, whatever. You weren't convicted in the year prior, so that's 2020 for this year. So you're still good. You can still claim this credit. However, if you get convicted in 2021, you can no longer claim this credit. Now let's dig into what qualifies as a college expense. Code section 25A subsection F defines this for us as tuition and fees required for the enrollment or attendance at an eligible institution. That also applies to you, your spouse, or any of your dependents too. Generally, that means books, supplies, or equipment that's required by the syllabus. And fortunate for all of us this last year, we all attended Zoom University, so that brand new MacBook you bought qualifies as an expense. Now, I'm going to walk you through how to do it. If you've made it this far into the video, you're obviously somewhat interested in making this year your best financial year yet. So do yourself a favor, do your boy a favor, hit that subscribe button, turn on those post notifications, because we're going to be dishing out valuable information all year long to help save you some money, to help make you some money, and you're not going to want to miss it. And while you're here, smash that like button, baby. Okay, so right here we have my 2015 1098T from when I went to school. I blocked off a lot of it because I don't want you guys seeing my private information. We're just gonna go ahead and put this information over here. So I was charged $65.97. My scholarships and grants were $5,225. And this year I had a pretty good year. I actually had to buy like 2 textbooks, so I'm just gonna throw in like $300 for number's sake. So over here you can see on this year, the standard way that everybody else does it, I only had qualified expenses of $1672. Like I said, the first $2,000 is dollar for dollar. So I just put $1672 in right here. My total refundable amount is $668.80. My non-refundable amount is $1,003.20. So the refundable amount is what you can get if you have zero tax liability. So say you didn't work a job at all year, but you still went to school and you still paid tuition or had tuition paid for you by scholarships, grants, and whatnot. This is the amount that you can still get in a tax refund even though you didn't pay any taxes at all. This amount down here takes away from any tax liability that you have. So say you worked a job, say you made $15,000 and they tax you and you owe about $1,500 on that. Those are just rough numbers, just for number's sake, don't worry about it. This number right here takes away from that. So even though it says it's non-refundable, you still get that back in your tax refund because you've paid $1,500 already. So the way that I'm gonna do it, the way this sensible way is I'm going to take all these numbers right here. I've got these qualified expenses of $1672 still. Our goal is to get this number right here to about 4,000, okay? So what we're going to do is we're going to take 4,000, subtract that 1672 to figure out how far off of that we are. So we're $23.28 off there. We'll put $23.28 right here. And it subtracts that from our scholarships and grants because we're going to be claiming that as other income. We're essentially telling the IRS we used $2,328 of our scholarships, of our grant money, of whatever we got from going to school to pay for rent, to pay for utilities, to pay for our car payment, whatever. And that's not unrealistic. I did that this year in 2015. A lot of my grants and scholarships and stuff like that went to other things that weren't school. So that's why we can do this. Anyways, so we'll figure this out. So like I said before, the first 2,000 is dollar for dollar. So what we're going to do is we're going to subtract that 4,000 from this 2,000, which leaves us with another 2,000. But the second 2,000 is only 25%. So we'll do 0.25 times 2,000 to get us our total credit of $2,500. So we've maxed out this credit now at $2,500. And our previous credit was $1,672. So doing it this way, you get an extra $700, $800. I'll even show you where it's reported on your IRS forms. So if you don't prepare your taxes by hand, which nobody does anymore, everybody uses Credit Karma or Liberty Tax or whoever they use. They're going to go through and just put in boxes. They're going to ask you a bunch of questions about whatever. There will be an option eventually in there to where you can claim other income. So what we're going to do is on this 1040, this is what your online systems, your TurboTax, your Credit Karma is filling out for you by asking you all these questions. They're going to go through and ask you what your marital status is, your name, all that kind of stuff, any dependents, anything like that. And then it pretty much goes through and asks you a bunch of questions about your W-2s, your wages, things like that. Right here, this other income, line 8, Schedule 1, line 9. That comes from right over here. The Schedule 1 is additional income and adjustments to income. So if you see right here, there's a bunch of different things that are additional income, such as alimony, taxable refunds, business income, rental real estate, farm income, unemployment compensation, or other income. When you put in other income and you're taxing your scholarships or grants, you're going to see the SCH right there. And then you want to put in that $23.28 amount. And then that will transfer over here to line 8. So all of your money is still accounted for. However, moving this money to be taxed actually gets you about $700 more than you would have had before. It might increase your tax liability by a little bit. However, usually the amount that you get in that credit offsets it by more than enough. I know a lot of this stuff still kind of sounds foreign or complex and kind of confusing, and it is. I might have been speaking gibberish the whole time for all you care. So what I'm going to do for you is if you go to the link below and fill out a contact form, or send me an email at connor@sensiblefinance.com. I will review your 2020 taxes for you and make sure that you're capitalizing on that American Opportunity Credit to its fullest potential. On top of that, I'll go back as far as 2017 and make sure that you're getting all the money that you deserve. I can almost guarantee that you've left some money on the table. So what are you waiting for? Go ahead and fill out that contact form below. Send me an email. Let's get the money back, baby. All right, guys, that's it for the video today. I hope you found it helpful. If you did, make sure you give us a like, make sure you subscribe. And if you made it this far, go ahead and comment screwdriver down below, just so I know you watched the whole thing. Well, that's it. Peace.